we want to talk today about the exciting world of crypto derivatives. You know, in the traditional finance, crypto derivatives are multiple times that of spot markets, and many would argue that to have a healthy crypto derivative space, crypto market, we need a healthy crypto derivative ecosystem. What's your view on what is needed to have a bigger growth and more activity when it comes to crypto derivatives?
It's a good question. I think we've been talking about institutional adoption for quite some years already. In the early days, it was small institutions joining, which were celebrated as the institutions are coming. I think that was perhaps too early, but today we're actually seeing it. So in the US, of course, we've seen the US ETF being approved and being embraced by the entire institutional system. Billions of dollars being allocated. But the next step is capital efficiency, and that's derivatives. So what we need next is the full derivatives space to evolve into a more traditional setup. That means regulation, capital security, that means custodians. But one of the key drivers would be capital, and capital to be provided by firms like Hidden Road, LTP, FalconX, the key prime brokers in the space. And that's what we've been seeing now. There's gradual growth. They've been performing their role. But there's quite some room for evolution still. But the key focus would be capital.
So to what extent do you also rely on the change in the landscape of regulations? I mean, everybody is excited about a presidency for Donald Trump and what that means for the regulatory environment, especially in the US. So to what extent do you think that that will reflect on the trading volume for options and for derivative markets as well in crypto?
We've seen a lot of effect already. So the presidency hasn't changed yet. It's still 2 months to go. But thus far, we've seen a massive price rally and a lot of volumes across all markets. So if you look at March this year was our best month ever. I think we're going to easily beat it in November. We are seeing a new record in options volumes already. So the market is embracing this new framework, still to be announced, which is still unclear what the actual details are going to be. But for us, the US is out of reach, so whatever happens there will not pave the way for us offshore platforms. We are here in Dubai, regulated by VARA, and this license is to be activated soon. The next step will be global licenses, not only for us, but for all the key players. So the framework will be more friendly looking at the US, adopting or embracing crypto. The key players in the US are making statements that they like Bitcoin and other coins. But for us to benefit from that, that's still a long way to go. But I think the overall ecosystem will benefit from it.
You mentioned obviously Bitcoin and some other altcoins. When it comes to crypto derivatives right now, what is the mix of instruments that are based with a Bitcoin underlying, sure, or also other coins, and what other activity you're seeing with some of the other altcoins outside of Bitcoin?
So 2 years ago, 1.5 years ago, BTC and ETH were about equal. The ETH merge was a big theme, and people were talking about the flipping, and ETH might take over. That didn't happen. Today for us, ETH is about, let's say, 20% of the volumes, and BTC is 80%. So the Bitcoin dominance is at all-time high. And that's why all the altcoins are also underperforming Bitcoin. There's a lot of attention because of the ETF, because of overall awareness of the importance of Bitcoin for the entire ecosystem. However, if you look at what's next, besides ETH, we have launched what we call linear options, which are more like standard options. We've launched XRP, Solana and BNB, and Solana is the key driver there. So 80 to 90% of our linear volumes are driven by Solana, which is really doing well and is challenging ETH dominance amongst, let's say, the altcoins.
So when you look at investors, between institutional and retail investors, who have the most appetite towards crypto derivatives?
I think both of them, but they trade different products. So if you look across markets, there's markets that focus more on institutions like us. 80% of our business is institutional. And markets that focus more on derivatives for retail, more like the Asian platforms. If you look at those, they trade perpetuals. If you look at our client base, they trade options and futures. So the majority of our products, volumes, let's say around 80% again, would be options and futures. So the institutions, typically traditional firms entering the crypto space, they trade what they know. And in the traditional space, perpetuals don't exist. Yeah. So the market is dominated by options and futures. And that's why they look around and come to us.
But you mentioned, Luuk, that obviously investors go to products that they know. I'm sure the question you get asked a lot is, how is the instruments you trade different from, for example, the listed options and futures on products like the CME, for example? How do you guys differentiate with TradFi offerings that have been known for some time?
I think overall products are comparable. An option is an option. However, the details are slightly different. We have what we call inverse options, meaning the collateral is in the same currency as the actual underlying. So you trade Bitcoin by depositing Bitcoin. If you compare it to, let's say, Tesla, you buy Tesla options by paying in Tesla. While in the traditional space, you don't pay in Tesla, you pay in dollars. So that's what we call linear options. We have both, so we have two types. And traditional markets like CME, you mentioned, typically have only one type, margining and pricing in dollars. That's also the key differentiator in terms of collateral. We accept multiple coins. We accept BTC and ETH and several crypto coins. We accept dollar stable coins. We accept yield-bearing treasuries. So we have a wider variety instead of only dollars. So why do people come to us? They have, let's say, 1,000 Bitcoin, 100 Bitcoin, and they want to generate yield. And in order to generate yield, you can sell out of the money options, for example, margining your crypto that you own. And you can't do that on markets like CME.
So, Luuk, one last question. What's your vision for the next decade when it comes to crypto derivatives? What do you see happening there?
It's a very boring vision, but it will take a lot of time. But it's gradual adoption of the regulatory framework and institutions entering the derivative space. So this will take time and a lot of energy and effort from all of us. But that's it. It will gradually become standard and become the norm across the entire financial space.
Slow and steady wins the race, as we always say. Luuk, thanks for being with us on Crypto Weekly. It was great to hear. Very exciting things happening in the crypto derivative space to follow, I guess.
Thank you so much, Luuk.
Thank you for having me.